You're listening to Fintechs, a podcast that explores the innovations and challenges in Canada's fintech landscape. My name is Sue Britton. I'm the CEO of Firefly Growth and an entrepreneur with over 30 years of experience in the financial industry. I also serve on the FinPay committee, and I'm an advisor for Holt Exchange. Join us as we sit down with industry leaders, trailblazers, and pioneers to discuss their journey, the evolution of fintech, and what's next for Canada's ever-dynamic fintech ecosystem. Welcome to another edition of Fintechs A, and today my guest is none other than the CEO and founder of Flinks.
Hi.
YG. You probably need to, I don't know how many people still call you YG, but I feel, since I think I met you in your first year of existence, at least as a business, I can call you that. But please introduce yourself.
Yeah, for sure. So my name is Yves-Gabriel Leboeuf. As you said it, everybody calls me YG simply because it's way too hard to pronounce in English, Yves-Gabriel. So I'm, as you said it, once again, founder and CEO of Flinks.
And you founded the company in 2016?
Incorporated in 2016, yeah.
Incorporated,
we launched in 2017, yeah.
In 2017, wow. Wow, how far you guys have come. So why don't you tell us, kind of what it is that you do?
For sure. And I can also perhaps do a 90 seconds about the history of Flinks.
Awesome.
But ultimately, what we do today is that we connect financial institutions to software companies. So we move the data behind the scene. And we also started more recently helping financial institutions share their data with those companies more easily. So ultimately, what we see ourselves having today at Flinks is a network, a bit like Visa or MasterCard. So we have hundreds of fintechs that are using our products today. And then we have hundreds of banks that are connected to Flinks. And what we found out is that the more we help those banks better distribute their data to the fintechs, the better it gets for the fintechs, the banks' customers, but also the banks. So that's kind of like that pivotal moment that we've reached where there is a win for everybody to collaborate, and we try to be that middleman that helps everybody collaborate. But perhaps on the history of Flinks, so first and foremost, I think a lot of people are asking me about the origin of the name, which stands for financial links. So ultimately, the core product that we wanted to build back in 2016 was bank connectivity. Back then, there was a couple of players down in the US. Plaid was starting. I think there were like 70, 80 employees just raised the Series A or something like that. There was Finicity, Yodlee, and a couple more. But truly, there were no solution for the Canadian market. And it was extremely challenging for Canadian fintechs to actually access Canadian banks' data. So we started with that in mind, really focus on building bank connectivity for initially the top 5 or 7, depending on where you live in Canada.
Right.
Top 7 banks for me in Canada. And after maybe 7-8 months of working on the product, which wasn't working that great, we were able to sign what I call interesting logo. So in July 2017, I think we signed WellSample. A month after, we signed TransferWise, now called Wise. And a couple months after, we signed MX, the banking data company down in Utah. And that was pivotal for us, ultimately attracting more customers. And that's something, I guess, that applies to every company where the more interesting companies are using you, the more companies will be attracted to you. So we leveraged that, eventually raised a seed round in 2018, then a Series A in, I think, 2020. And then as we were gearing up for the Series B round of financing, we had a couple of term sheets early 2021. And we eventually decided to I would say, deepen the relationship that we already had with National Bank of Canada, which was among the term sheet we were facing back then. So National Bank took about 80% ownership in the company. So we're now kind of a subsidiary of National Bank, but still independent. And we've been working with them since then.
Wow. It's, you make it sound so, sort of simple in a way. We did this and then we did this and then we did this. And yet it was, I'm sure, like every other day was probably an existential moment for a while, right? Like you're trying to do something, not necessarily like for the first time, given that others were in the market.
Yeah.
But starting a company from, I think I remember you like your first round was like friends and family.
Yeah.
And all of you guys kind of getting together to, sort of kick this off. From then to now, it's a ton of accomplishment and a ton of work.
For sure. I do have a fun story back in 2017. I think it was July 2017. We were about to sign Wealthsimple. I think we had $20,000 left in the bank account, which was like for us maybe like 2-3 weeks of cash flow. And every day in the public channel on Slack, you were writing how much money we were spending, how much money there was left. And so it was, we were trying to put ourselves a lot of pressure. And we eventually had to go back to those friends and family and ask for a bit more cash.
Well, because I think it just brings such a different perspective when you have actually had to go through that. And I know that Eitan talks about that with North One, like, remembers his last bit of money and does it go to rent or does it go to, the business? Like, and that now you look at these companies like yourselves and it's probably such a healthy perspective, even if you're working in a big company, right?
I think
to
so
be
as well.
Thinking, yeah. So then, I mean, you said something at the very beginning, and I remember when I think I was working with CIBC at the time, and some of your team came in to talk to CIBC, and the initial reaction, and I'm not saying CIBC, but just generally from the financial institutions is, well, what do you mean you're sharing, you're scraping data and all this stuff? So that was probably the initial reason why the banks were, kind of saying, well, what's in it for us? Because right now you're just taking. And the reality is, like, I mean, the origins of that, that's globally that's happening. It's not something that, just happened here. In fact, we're late to the game with this kind of thing. And like even back in the, Tangerine days, before Tangerine was Tangerine, it was ING Direct. And the only way you can open a bank account digitally was if you shared your banking credentials. But that at that time, that was approved, ironically, for them to do that. So, interesting.
I do remember sitting down with one of the big banks, probably in 2018. And it was a cat and mouse game. So they were trying to like put in place some security feature to block scrapers. Then you were finding ways to dodge those security features. Not like that anymore, quite frankly. But back in the days, it was literally a cat and mouse game. And sat down with one of the big banks, two folks from, I guess, the open banking team, and big smile on their face. And they asked me, so how is aggregation today? And I'm like, it's all fine. It's like, we're up and running. Everything is going well. And they're like, yeah, it means it doesn't work. And my point is, like, the narrative has changed quite a lot since that world. And I think one realization, us as well, fintechs as well, banks as well, it's that sharing credential ultimately potentially create a systemic risk in the financial system in Canada. You can't block innovation. You cannot block people from wanting to use this or that application, they're going to find a way to do it.
Yeah.
But attacking screen scraping, which ultimately is not something anybody likes. Like, we don't like screen scraping. It's just that it's the only way, or back then it was the only way for companies to access their customers' financial data. So I think there was that aha moment from the banks, whereas they're now thinking, right, so there's a lot to be lost. And at the end of the day, when there's an event, I would say like a unfortunate event happening in the system, people will go where there's money, which is the banks. So I think we're reaching that point, and there will be a bit of a catch up. And I see 2024 as a pivotal year for the industry-led solution in Canada. We have a bunch of announcements to do in the upcoming quarters, so quite excited about the upcoming year.
That's awesome. Yeah, I'm very impressed with where you guys have gotten to with with EQ Bank and with obviously with National Bank and some credit unions, and I think just recently Everlink, and sure the list is longer. But one thing, just like as I our listeners are obviously in our ecosystem, and so versus like the general consumer or business. But I was so I took this part-time job as Chief Innovation Officer for this new credit union in BC.
I saw that. Congrats.
And and I told myself that this was the opportunity for me to actually do what I practice what I preach.
Right.
Yeah. Anyway, no, I'm joking. It's actually it's super fun, and the opportunity is huge, just like I feel like I felt when I was on the other side of the door. But I was showing some people how I was in my Neo account, and I was showing some people how I could add an account, and I actually searched the credit union, and it is an institution that I could do that with, and they're like, "Well, what does that mean?" And I'm like, well, it means that I can actually, share my banking credentials for that credit union with Neo, and then Neo can actually, provide my service, get my transaction data, and also I'm going to ask them to transfer money. But, and I did the same thing with Clear Estate, because I started using Clear Estate as someone who's been through, kind of family, health trauma, and needing to make sure that my kids were all going to be, everything was all buttoned down and looked after in terms of, if my husband and I died. And I did this exact same thing, and they're like people just don't understand that we're already doing all of this, and that, step one is just improving the way it's happening, making it
100%.
Much more, and I think I read something in Minister Freeland's economic statement, or maybe it was a follow-on statement on the consumer-driven banking, or whatever they're calling it now. But it was like something like 9 million Canadians are sharing their banking credentials.
Yeah, I'm not surprised.
Yeah, and at the end of the day, it's probably even more than that, right? Like, how do you actually measure that? I mean, you guys see it firsthand because you actually are in the middle of, who is sharing what for whom. But anyway, I think it's just interesting that people, it's a hard concept to understand, right? To the layperson, what we're actually talking about here. Okay, so we fully expect that this is going to come to fruition this year. I actually think anyone who's still a skeptic should probably just drop their skepticism. Like, it's a fait accompli, in my opinion, right? Open banking and the regulations and all of that kind of stuff. Do you agree? It's all...
I mean, regulation is coming, but I'm kind of always more appreciative of the things we can control, and unfortunately, we cannot control regulation. What I see though is that most banks, maybe 2 years ago, we started seeing a movement of smaller banks, smaller credit unions, actually starting to think, okay, if that is coming, what should we do now? And that's how we started working on the outbound product that we have today. What we see today is that some finance that have started their reflection years ago are actually getting to a point where they want to implement the solution ahead of regulation because they see the benefits, as I was saying before. And that's why I think 2024 will be a pivotal year for open banking in Canada, independently of regulation. What we see is that big banks are actually going to potentially move towards solutions to implementing solutions to answer both their retail clients and business clients' needs. If you think about it, like say you're CTO of a big bank. Right now, it's probably a massive struggle for your small and medium-sized businesses, clients to share their information with QuickBooks, with Xero or FreshBooks or whatever. But that's a massive pain point for SMBs, and SMBs currently have other things to think about, right? Most financial institutions are actually quite ready to share their data. Like most of them, from my perspective, have the existing infrastructure to share the data. It's almost as if they had to turn it on. And for that, what we call last mile delivery, we're generally a preferred partner because we have those companies using us today. They are using Flinks today. They're just driving their traffic to the better way to access the data. And it's now up to the bank to better service their clients by enabling those clients to use OAuth direct connectivity or call it whatever. So I think we're there now, independently of the regulation. What the regulation did well, or like the discussions of a potential regulation in Canada, I think it has pressured banks to stop thinking about it and start working on it. And that's why I think most of them are ready to turn it on right away.
And then, and okay, so that's good. Let's not, I think the more important thing is, as you said, like people are talking about, okay, what's our strategy? Are we going to make this about creating openness? And I remember reading something about National Bank's strategy way back when on, just the idea that they wanted to be, the bank that had the most connections to, fintechs and then obviously that, in comes Flinks. But like the other strategy is, well, let's make it difficult, for consumers until we can catch up and have, all the product gaps filled so that we don't lose customers to fintechs for things we want to keep, kind of like, so that, whatever strategy, everyone's kind of focused on sort of solidifying that. And then what's the implementation strategy to implement that. So let's talk about the art of the possible. And I would love to be able to go to the CTO at my credit union and say, I want to, which I will. He just started actually yesterday.
Or share the podcast.
I will. He actually comes from EQ Equitable. So
cool. He comes from a good place.
Yeah. But like the idea that at the very, and I've said this like a lot publicly, like at the very minimum for your small business customer, provide a secure connection to their accounting software, because that is like lights out for a small business, at least when it comes to doing anything, with their accountants or their bookkeepers or, calculating what GST payment do I need to make this month? Like all of that shit is super, for the most, not for every single small business, but those that rely on the accounting software, it's super important. And right now, like the majority of them are not stable connections, right? They're, And so that's an easy thing to do from your...
100%. Well, I mean, define easy is always the question, but I think we're there. I think most banks are there. I think we can easily, at this point, right now they can easily implement solutions to distribute their data. The other thing is that as a bank, I think the the ultimate like decision you have to do is the trade-off. So what's the trade-off if you do this year? What else they're not going to do this year? But I think once you've actually accurately thought of the potential destruction using screen scraping and credential sharing that this can have, I think it's a no-brainer. Like I think all of the banks should have done that like years ago. And I think they just dodged that, or some of them have been dodging that question. Yeah, but we should stop screen scraping. I agree. We all agree that we should stop screen scraping. The solution is not to stop the access to the data. The data will get shared no matter what.
No matter what. Yeah.
The solution is to have a secure one, a fast one, and one where those financial institutions can actually benefit from. Because again, a small story, like years ago, remember sitting with one of the big banks. We get to the meeting, there's like 15 people in front of us. We're like 2 people from Flinks. And they tell us, we want exactly what you guys did for Wealthsimple. And we're like, cool, let's do that. There it is. It's called aggregation. We just like connect other banks to your system. And they're like, well, it's never going to be accepted by the security team. Well, that's it. Like there was that point where innovation was blocked by the lack of trying to innovate by themselves, because they could have said, okay, fine, we're going to like secure our own data. We're going to provide data through API. And in exchange, we're going to use aggregation to build new product, build some new innovative ideas. And this should ultimately pressure the market to change. And and eventually they decided not to move forward. And what happened to Wealthsimple is that they're now at like $40 billion under management or something like that. And back then they were like at 1.5, 2, I don't know. So I think those are things that perhaps, to your point earlier, most of the banks were like, let's just try to kill them. Let's just try to block them. But behind the scene, most fintechs, or like at least one contestant in every verticals in the fintech industry, has been winning rounds against the bank. And now most banks are like, okay, now we want cool products. Now we want to build some innovative stuff. I think it's going to result to a better. I don't know what's the future. Like I don't know how much fintechs will have in terms of market shares and so on. But I think independently, like the fintech war is won. Like independently of what happens in terms of market shares, I think banks will have to deliver better products. Yeah.
And, with power comes great responsibility, right? And so like there is, and that's part of, I think, and now that I'm, sort of working inside a financial institution, I can appreciate, we can never do that kind of mentality. It's not like deliberately obstructing it. It's knowledge, and it's like we don't train people to ask, well, why not? Right? It's like, oh, okay, well, you run security, or you run this, or you run that, or you're the regulator, or you're this, and so therefore you must know what you're talking about, and so, okay, I guess we can't do that. Like the reality is, like, and I think at its very core, that's what innovation is. It's like, when you create something and it's what customers want, you sort of have to ask, well, why can't we offer it to them? Like, what is the real reason why we can't do that? And it almost always ends up being, well, because we've always done it the other way. And anyway, so I'm developing more empathy for those folks that live inside these financial institutions. It doesn't mean that the heat is not on, right? Like they still have, I feel like the sense of urgency is one of the things that individuals inside of these organizations don't feel enough. And it's partly because, unlike you and I, they don't live outside in the world of, new technology and innovation. And anyway, so
and I mean, they've been around for 100 years, so a little more than 100 years. So like they know things we don't know, right? And ultimately, all of the processes inside a bank are there for a reason, right? So I think like, and we got to learn a lot by working directly with National Bank on that front. And even though they're generally speaking much smaller bank than TD or RBC, they have a lot of processes, and I think it's great. I think all of those processes are there for a reason. Now the question though is, how do you keep winning in the market by also respecting your processes? So sometimes it's about it's not so much about what you can and cannot do, but more on how you can do those and respect your processes. Which I think is a hard question to answer, but I think some institutions are actually doing it properly more and more.
Yeah. I mean, one comes to mind. I was really I think I saw this a couple of days ago where Carey is not issuing their cards anymore directly to businesses, and they're kind of moving more into a program manager role, like Brim. In many ways. But the thing about Carey that I loved was the fact that a small business wouldn't have to take out a credit card that would, require them to be personally liable, right? Or have an impact on their personal credit score.
Yeah.
And I know I'm likely oversimplifying, but the big challenge is, well, we can't really validate you as a business in the same way. Like especially if you're small, right? A small business, in the same way we could, a commercial business that's been around for, 3, 5, 10 years. And so we have to have that additional level of protection by saying, if your business doesn't pay your credit card, we're going after you personally. That's just a data issue, right?
Yeah.
100%. That's a good example of a process that needs to be questioned.
Yeah.
Inside a bank. Yeah. Well, okay, if you could, get your risk questions answered about a small business, do you still need to do that? Which is, I think, what Carey sort of brought to the table, right? It's like they figured out a way around that. But so where do you see the innovation happening, kind of maybe in terms of horizons? Do you think that, in the short term, it's going to be about just being able to securely, via APIs and security, frameworks, share data? That's step one. Or are some people going to leapfrog and go into product-specific things? How's that?
I don't necessarily see that much innovation in the API space in the fintech industry in the near future. I'm not so much knowledgeable of crypto as a whole, so I couldn't personally express myself on that. It's something we at Flinks have a look on, but from a pure I would say data sharing and data accessibility standpoint, not from a potential disruptive aspect to the financial industry. But that aside, I'm personally quite bullish on embedded lending. I think we come from an era where everybody was talking about embedded banking, but I don't think that embedded banking was actually the right solution for Canadian consumers. I think most people are much more willing to open up a loan somewhere else than a bank account. Might be wrong, but what I would see potentially happening over the next, I would say call it 2 years, is an accelerated movement in embedded lending. I think there's a bunch of opportunities for the folks looking to start something in that space. I know Fig is doing some work in that space, but There's much more opportunities in that space, and I think from a pure retail banking standpoint and opportunity, I think starting out with lending products is potentially much lower hanging fruit than banking products. I think we saw some large enterprise in Canada offering bank account, offering prepaid credit card, and so on. I probably don't have any information that you don't have, but I would assume that it's quite challenging in terms of cost of acquisition and retention of customers. When you have a loan somewhere, you have to go there. So I think personally, it's a space where I think there's a lot to be made.
And is it embedded? Like when you say embedded lending, like is it? I'm buying. I mean, these examples aren't new, but like I'm buying something, and instead of using my credit card or my other types of like line of credit, whatever, the person selling me the product can give me, financing in order to buy it, or what kind of it? Like where do you see some of the embedding actually happening?
I think from my example, like from a SMB standpoint, I think the companies and we saw that starting with like Stripe Capital, but companies that actually are within the infrastructure of SMB are well positioned to offer lending products, lending solutions, and I think that has the potential to compete quite aggressively against the bank. Because if we just take a few minutes to talk about Stripe Capital, I don't know how much you know about it, but ultimately,
for sure.
Stripe has started providing loans. It's like kind of merchant advance, but not exactly merchant advance. And at the end of the day, for them, it's a risk-free loan. They handle your cash, they handle your money, so they hold a full week of transactions in escrow in their account, while providing you capital to help you grow your company. So it's not only it's a win-win-win, but it's also a risk-free opportunity for Stripe Capital. Of course, that's probably like the ultimate embedded lending opportunity that there was, but I think we'll see more and more of those in use cases that I could potentially not even think of. But in the insurance space, I think we could potentially see more products of more lending products, I would say, happening with retail clients as well.
Yeah. It's kind
of at the end of the day, it's like banking is a bit commoditized. Lending is much less commoditized. Like a lot of people are paying too much interest. A lot of people are unhappy with the terms of their loans. And when you can find massive opportunity with less risk than someone else, you can end up ultimately transferring a lot of assets on your balance sheet and making tons of money. But curious to see the innovation in that space. I think we're in a time where, as much as there was a lot of action happening in the investment space, I think with the current economical context, the investment space is less prime or ripe for more disruption. It's probably going to wait a couple more years. So I do see a lot happening in lending.
And and I mean the other thing that just popped into my head when I was listening to you is like a lot of the times you can't get a loan as a small business, so it's even getting access to an alternative. Interesting. And what do you think? I have
a fun story about that actually.
Oh, good. Good.
So before starting Flinks, I've had a couple of businesses. One of them was called Moose Bicycle. So we're direct to consumer bike brand. Still exists. Website is still there. We sold it the other shareholders when we started Flinks. And one of the challenge was exactly that. We couldn't have a loan to finance the bike. And building bikes is really kind of a heavy cash business, because you have to front, in most cases, the deposit to build your bike almost a full year ahead of actually having them delivered to your customers. So sometimes you're thinking of like hundreds of thousands of dollars. And I was doing that in my parents' basement, so I didn't have $100,000 to cut. But at the end of the day, the back then, again, we were using Stripe. The risk would have been quite minimal for Stripe to front that cash to us, because all of the transactions, all of the bikes we were selling were through Stripe. And that's just yet another example of frustration where I couldn't go to a bank and ask for $100,000 because I was a 21 years old dude living at my parents. They wouldn't give that. Like they could give me $2,000, but that's it. So there was no easy solution. And when there is no easy solution, you turn to private investor, private lender, and then it's I think like once again, there is a lot of infrastructure play to be done in lending, and see where you can sit in the ecosystem to offer a competitive product with a minimal risk.
Yeah. Do you think the banks are going to get this fixed anytime soon? Like in their own, like are they looking at the small business segment and open banking, whether it's industry, sort of led at the moment and or not? Are they going to start to say like, well, we should expand our offering to small businesses to make things easier for them using data?
If I was the CTO of a bank for SMBs, I would definitely start thinking about it. I think if you the second you start thinking of the fact that QuickBooks, Xero, FreshBooks could start offering bank account and loan,
I know.
As a bank, you should be scared. And it's
I'd move there instantly.
Yeah, and it's same for I don't like to say that I spend a lot of money on Amazon, but I do spend a lot of money on Amazon. So the second I have a very interesting credit card offering from Amazon, why wouldn't I go with them? Like it's where I buy most of my things, unfortunately. So
it's kind of no different than Starbucks, right? Like if you become this, sort of addicted to Starbucks, then why wouldn't you? They're going to give you rewards if you load your card with,
exactly.
And use your card. Like it's all the same story, just different time, different place, right? Yeah.
So back to your question, I think banks should definitely start thinking. I think most banks should stop thinking about improving their systems, improving what they have, and think a little bit more outside the box and start thinking, okay, where is my customers gonna go in 2 years, 5 years, 10 years, and try to be there waiting for them instead of improving interfaces.
Yeah. I mean, it's a tough problem. Like this credit union that I joined has merged with another credit union, and both of them are relatively the same size. And I think merging credit unions is a huge thing that's not going to stop anytime soon in Canada. My a little bit of what keeps me up at night is how do you innovate when you've got so much technology and operations to, integrate and rationalize and all that kind of stuff. Like I actually don't know. I mean, selfishly, I kind of want to be able to, make the argument that you can't, if everybody goes and tries to modernize all their technology before they innovate, they probably won't exist in 10 years.
Yeah.
So what do you do?
Well, that's a good question. I think most people don't have the answer. I don't think I have the answer. I think like I'm lucky to be close to a bank that I think has a very strong strategy to attack that. But if I just like put myself out of that and start from like a blank page on how to solve that problem, um, it's I think like one of the hyper successful thing startup I've been doing for the past 20 years, and specifically in San Francisco, I think it's something that we call the lipstick on a pig. So it's literally to like build something beautiful that will attract customers, or in their cases, because we're talking about bank, they already have millions of customers, but that will that your customers are gonna like and improve from there. And I know like some of the problems, such as like the core banking systems that cost a lot of money and so on, like they're still gonna be there. But ultimately, you have two options. You either attack your technological debt, and it costs a lot of money, and it might not be a success, or you keep building on top of it by kind of having a middleware infrastructure to interact between the two, and you bet on the fact that you're going to win enough in the future with your new business that you're going to attack that massive problem down the road, or simply never. So the big bet to be done is, are you able to use that middleware enough in such a way that you won't ever be blocked from having that old core banking system behind the scene? I'm not a CTO of a bank. That's the bet I would do. I would not even think about changing the core banking for now. I would simply try to build on it as much as possible and launch new, like when we kind of like inside things, when we look at like market winners, the trend we see is a trend where they launch something extremely beautiful that users like, and then they improve from there. There's a case to be made where if banks would approach innovation in the same way, perhaps instead of changing completely their core banking system, they would simply like start slowly building a new one beside that whole core banking. If I was the CTO of a bank, that's what I would do.
You know, so many things come to mind. I was thinking about RBCX and all the new ventures, and the fact that, you know, many of them can't connect into the bank, and maybe that's more, you know, risk or security type decisions and not technology decisions. Because I got to think, you know, if you could connect your Mido account into your online banking in RBC, you would. Like, there's no technological reason why you wouldn't. You know, and you know, similarly in other areas, I would imagine the same is true. Because because I don't know. I wonder if those, you know, the banks and credit unions that have this big technology debt, if you haven't started tackling it, it's like, you know, it's a hedge, I guess, or it's a calculated decision. Do I start fixing it now in this newly growing competitive market? Or, I mean, even checks, when we first were able to deposit checks in Canada into our bank accounts, the only thing that existed was the front end user experience. The checks were still, they were printed off inside the banks. They were still
processed the same way.
Yeah, because they didn't have the ability to completely get rid of a printed check. So
that's true innovation. Like that's the way it should work.
We should do that to our payment systems.
Yeah. Take a picture of $20.
Yeah. So we haven't talked about the you know, beyond Canada, and I know you guys have a presence in the US. I don't know actually. What's your global strategy?
We're not thinking for now. We're not thinking to go broader than the US. I think we like when we started, like Canada was challenging in terms of market size. But the more we grow, the more we launch new products. Like I still, we're only in Canada, and we generate hundreds of millions of dollars in revenue. Like that's a very achievable goal for us at Flinks. The reason we entered the US is, of course, initially was to expand the addressable market, but it's also because we have a lot of wins in some very key verticals, and that we know we can replicate those wins in the US. The US market is quite similar to the Asian one. There's of course much more volume when you're successful in entering in a vertical, in a specific vertical. So far so good. We have a pretty good, I would say, client base in the US. And the strategy for us is to roll out the product that we're building here in Canada, in the US as well, as they're picking up in Canada. So, but abroad the US, I don't see ourselves like in the next 4 or 5 years expand anywhere else for now.
Yeah. Do you have any like market and like, it seems like, we hear about new deals being done, with credit unions or groups of credit unions, or there's the SimCore, offering, is there much more space in the market still to, kind of close in terms of the financial institution relationship?
100%. I think I like there's a lot of incumbents. There's a lot of companies offering products similar to the initial core product we used to only have. There's also like bigger players now, like SimCore, trying to come up with an offering for data sharing. I think our position has changed over the past years, where we're not competing against those organizations, but we see them as potential partners, all of them, even Plan and Yodlee and whoever else. And the reason for that is that we trust we have close to 90% market shares in terms of fintech usage. And that being said, we are potentially the best, I would say, partner for financial institutions that want to distribute their data, not through several partners. Most banks are not going to equip themselves with like a team to manage the aggregators, to manage the fintechs. Like, that's not their business. They don't want that. They want someone to do what they call the last mile, what we call the last mile delivery. And since we are positioning ourselves as the best partner for those banks, we're more than happy to help anybody else that wants to access the data. It could be Plaid, it could be SimCore, it could be another bank. We don't care. So yeah, I think we changed our narrative quite a lot over the years.
Can you help credit unions and banks with partnering with those fintechs that you have as clients?
100%. I think like it all starts with providing those CUs and banks with the infrastructure to more easily share their data, and help them also control their data. So ultimately they know where their customers' data is going. I think that's quite insightful for them. But at the end of the day, we're also, once again, at the middle of the ecosystem. We can, of course, facilitate introduction. We've done that in the past with one example that comes to mind, AQ Bank and TransferWise, which ultimately ended up in a partnership. So that was actually an introduction that we did, Andrew, the CEO, to TransferWise, because EQ Bank's, my understanding is that EQ Bank's goal was to provide the best solution to their customers without building international remittance company inside. But I think that's just one example of what we can do for our partners. And ultimately, like, we sit at the middle, we do the introduction. We don't do the business between the two organizations. Like that's for them to settle on.
Good. Yeah. And hopefully they've innovated the way they do that. What about like if you're, a credit union or a smaller bank listening to you and they're thinking, well, how long does it take, to stand up the Flinks infrastructure so that I can start doing some of this stuff? Just, I know there's no specifics, but like roughly what is that expectation that you would say to that person?
So what like we now have quite a bit of experience. We've done that several times over the past 18 months. And what we see is that in most cases, the implementation can take about 2-3 months. It's not necessarily something that is quite complicated technically, but we do need some resources from the banks and again from the Flinks side as well to properly go and connect where we have to connect, and then QA test and from a security standpoint as well. But yeah, within a couple months we can be up and running for a full-fledged data sharing solution.
And then can you also intercept any of the sort of aggregation requests and then sort of lock things down from an API standpoint as part of that?
That's not the product we're offering today. I mean, the fact of helping to block other aggregators accessing, it's not something we do. But
not block, but enable somehow through a more secure way.
So
I don't know.
What we see today is that some aggregators are actually going to start working with Flinks in the near future. We're just finalizing those discussions. The intent is that they're going to use us for the direct connectivity that we have with the bank. So the more we have those direct connectivity, the more connectivity that they will use as well. I think to your question, in a hypothetical world where Plaid does use Flinks to access, by example, national banks APIs, if we were to launch another bank's API, the idea is that they would use us as well.
Makes sense.
I mean, back to the point that banks don't want to manage aggregators. It's not their business. They don't want to do that. They don't care about it. So
yeah. Oh, very cool. I know you have a hard stop and are a busy guy. So business is going to be good for 2024?
So. Yeah, I'm excited about it. Yeah.
That's good. That's awesome. Any parting comments? Any, kind of wisdom for all those people out there who are trying to figure this stuff out?
Nothing other than anybody can reach out to me. I'm always more than happy to grab a virtual coffee or just have a quick chat. So no, for sure they can write me, and I'm gonna take any opportunity to meet anybody in the ecosystem for sure.
You can still do that? Oh my God! How many employees do you guys have now?
We're about 150, I think. We haven't scaled that much the team over the past year or so. We're at a good size for what we want to deliver.
Well, and actually, in that case, I almost regretted asking that question because the number of employees doesn't necessarily mean how big you are, especially in a software.
Not at all.
In data world, yeah. We've been talking about that as a credit union. It's still a measure of efficiency.
How much you spend.
Yeah. And I respect it. It's just but anyway. Well, it was great to catch up with you. And
absolutely.
Those of you that did well, you couldn't have heard because we talked about this before we went on recording that you've cut your sort of hair.
Yeah.
That it was so well known in the
nothing left.
See? Nothing left.
They were part of the fintech ecosystem.
It was. Your hair was part of the fintech ecosystem. Exactly. Anyway. Good to chat with you. And yeah, congrats on everything. Have a great year. I'm sure we'll see each other at some point. Yeah.
For sure.
Thanks very much.
All right.
Thanks, YG.
Thanks, Sue.
Okay.
Bye-bye.
Take care. Bye. Thanks for joining us. Looking for more insights? Visit us at fintechscanada.ca or follow us on LinkedIn. We'll see you next time for more on Canada's latest fintech innovations.